For all verified facts, subscribe to our YouTube channel and click the bell icon to get the latest updates.
Hello and welcome. India's GDP or gross domestic product has fallen 23.9% or almost 24% for the 3 months ended June, in contrast to the same period last year. Now, this is obviously a significant fall, but it's also to be seen in the context of the lockdown that India had imposed starting the third week of March. Now, the question, of course, is that what does this mean? What does such a dramatic fall in GDP mean, and to what extent should we be interpreting this as a sign of problems present and future? To discuss this, I'm joined by DK Joshi, Chief Economist of CRISIL. Mr. Joshi, thank you so much for joining us. 2 points that you've made in the past, or rather 1 point you have said in the past, that successive lockdowns will have a non-linear and multiplicative effect on the economy. A 2-month lockdown, and this is very interesting, is more than twice as debilitating as a 1-month lockdown as the buffers keep eroding. So now we are, of course, at perhaps the 5th and going into the 6th month of a lockdown. So I really wonder what this impact could be. The second point, of course, is the numbers that CRISIL has been putting out, and CRISIL had forecasted a permanent loss to GDP of about 10% earlier, and it had also said that for this quarter there would be a 25% contraction. So to that extent, I think your numbers are somewhat online. So let's come back to that question. So to what does this 24% mean?
Well, I think this is, in a sense, telling you that a quarter of the economic activity has been lost, right? 25% for the first quarter. Now, it means different things for different people. Depending on whether you are in the agriculture profession or industrial profession or services, you will be impacted differently. For instance, let's take the case of agriculture. We all know is doing reasonably well. I mean, but if you compare industry and services, now the initial hit to the industry has been more than the hit to the services. But the resilience of industry is much more because it will rebound quickly. Services still will suffer from face-to-face related issues. So parts of the services, like for instance, wherever, I think, whether it is entertainment or it is your sports or it is tourism, aviation. I think so. These will not return back to normal. The manufacturing can still return back to normal. So I think the services related activities, parts of it will continue to have a longer slowdown impact than manufacturing. So that is one.
Right. So yeah, go ahead.
Yeah. So I think the other at the other level is, I mean, okay, what does it actually mean? I mean, so what we are seeing in data is that, well, private consumption has gone down very significantly. Investments have gone down even more. So I think so. This investments in a way determine the potential of the economy also. So I think unless this reverses, then this does have a medium-term consequence as well. Whereas consumption can bounce back.
Right. So we, of course, went from 8 quarters of slowdown into a lockdown. Now, how much of that is really impacting these numbers?
Well, I think the slowdown, I mean, if I were to decompose the first quarter into months, let's say, I don't have GDP for each month, but April was the most stringent lockdown, I think, that India had. I think whatever lockdowns were there in the world, I think according to Oxford Stringency Index, it was one of the most. So economic activity came to a sudden stop in some sense for large part of the economy. So that part was more impacted. After that, May and June, I think there were relaxations. So we did see in high frequency data things moving up. But the point is they are still, I think, I would say 10% below the pre-COVID level for most of the activities. So you are stabilizing at a level which is still below what you would treat as normal level of activity, which essentially means you are degrowing.
Right. Right, and I'll come back to that in a moment. So, now GDP is relative, as in when we talk about a 23% fall or a 23.9% fall, it's in our country. Now, there are GDP figures that have come out now for this quarter for all countries or most countries, and the IMF has also released figures. But India seems to have contracted or done the worst. Now, all countries went into lockdown. All have faced a similar problem. And like I said, it's a relative to your own figure. I mean, we are only comparing to our own figures in the previous year. So why is it that India has got hit more?
Well, I think that's a very interesting question, because I think if I were to just draw a parallel very quickly to the global financial crisis, at that time we were growing 300 basis point above the global growth, which was mildly negative during the peak of the crisis. This time around, we are going to grow slower than the world economy. So S&P's global outlook is 3.8% world GDP growth. We have actually slipped below that now. So which essentially tells you that we are getting impacted disproportionately more than other economies. I think there are several reasons for that. One of them is the initial conditions. I mean, you entered the crisis with, if I were to use that term, weak immunity. I mean, so to say, because I think whether it is financial sector or it is which was in a cleanup process, the GDP growth was slowing down. Within that, investments were already negative, I think, and in the last quarter, private consumption was also weak. And exports were also shrinking. So you entered the crisis with a little low immunity, and what the crisis did was it magnified all those problems. So if you entered with a slightly stronger wicket, I think the hit would not be that much. Now the only way to offset is to pump in a huge amount of stimulus, which I think India's stimulus is a little lower than other economies, though it is not the major cause of the difference. Major cause of the difference is that you have weak initial conditions and you need more support to the economy if you want to want your GDP to suffer less.
Right. So can you dwell a little on the line that I quoted from you earlier, which talked about the impact of successive lockdowns and the non-linear and multiplicative effect on the economy? So are we in a way suffering more because we've extended the lockdown, and maybe if we had not, then things would have been very different?
Well, that's very hard to say that, but I think what I meant by successive lockdown was that if you have the lockdown of same intensity, let's assume, then I think 2-month lockdown is not 2 times as much as the 1 month. It is more than. So I think since the intensity has been coming down, so the impact of lockdown on the economy is also not that severe, I mean, so to say. So that non-linearity exists. I mean, if you stay, let's say, very weak for a long period of time, obviously your buffers will keep getting eroded, and I think the businesses will become more and more vulnerable. I think that is true. But in terms of stringency of the lockdown, I think it is becoming less and less stringent. So it is kind of in a way offsetting that non-linearity I was talking about.
Right. So, and you said that some sectors are doing well. One of them is agriculture. And let me quote you again, saying that agriculture is resilient because crops will keep growing whether there is COVID or not.
Yeah, I think that's true, because I think the production trends are pretty healthy. Rains are normal for most parts of the economy, where I think where Kharif is prominent. Also, I think the sowing has progressed reasonably well. So fertilizer consumption, or whether it is pesticide, I think everything, tractors, everything is indicating that, okay, maybe this segment is somewhat better. And I wanted to point out that in a pandemic situation, agriculture may only have 15% weight in GDP, but it punches more than its weight in GDP, because it supports about 40% of the population directly or indirectly. And second, nutrition is so important during a pandemic. So that's a saving grace, I think, that agriculture is doing well. So I think, what was the next question you had? I mean, besides agriculture?
No, so So the question is that if agriculture is resilient, as you have pointed out, and it's not affected by COVID, then to what extent does it counterbalance all the other sectors that have not done so well?
From a welfare perspective, it does. As I said, nutrition perspective, food security perspective, it is very, very important. I mean, I think that there's no doubt about that. But beyond that, I think if you measure the economic activity as GDP, it only has a share of 15%. So it really can't
right.
offset the rest 85%, which is sinking deeper. But where I think both industry and services, we have seen the data. I think construction, the most labor-intensive sector, I think shrank by almost 50%. The investments have also fallen by 47%. So I think there's been deep hit. I mean, no matter how you slice it and dice it. Overall, I think the hit in the first quarter has been very deep. I mean, so to say.
Right. And last question. So, what will it take to recover all of this? I mean, the lost GDP, the lost the growth, the lost production and productivity.
Well, I think lost GDP this time, I mean, you need to grow very fast if you want to recover whatever you've lost. So you would have grown at 5%, let's assume. If you are growing at -5%, then this is 10% of GDP. Will you recover it in the next couple of years? Very unlikely. Even if you grow at 7% per annum for the next 3 to 4 years, I think this permanent loss will stay. You need to grow more than 11% to recover this loss, which I think is so. Some part of the GDP is lost. I think as far as the productivity etc. is concerned, that I think will depend on. I think to some extent the productivity depends on what kind of reforms are pushed ahead. I mean, particularly I'm talking of agriculture. If agriculture reforms are, if markets are developed, and I think we push these reforms forward, then I think that does create an upside, I think, to agriculture production, and you can, I mean, be an exporter, and all those things can play out. I think other thing which can offset this is, I would say, that the two reforms which government had started, which was IBC, bankruptcy code, and the second one was GST. So they were not, I mean, they are still undergoing tweaking, changes. They've not been streamlined as yet. I think reforms pay off with a lag. So I think if government focuses on streamlining them, then I think whenever the recovery starts, I think that will contribute positively to efficiency. I think these are the measures which will help you over the long run. In the short run, I think you still need to, I believe you still need to spend more so that the bridge between the crisis and the recovery is strong enough to carry the businesses and the individuals to the other side.
Right. That's a positive note in a way to end on. DK Joshi, Chief Economist at CRISIL, thank you very much for joining us.
Thank you. It's always a pleasure.